Good evening, guys, and welcome to this evening's Collab. Hi, Izzy. Nice to see you online. I've been feeling very lonely online this evening. I'm going to start so long, and then if anybody else joins us, they'll be able to catch up because the session is recorded. Hello. And then also those students that aren't online tonight, they can go and listen to the recording afterwards. So what I want to do this evening is to give you guys feedback on your assignment 1 and to go over the answers so that you guys can see what you should have done in the assignment, but most importantly, just so that you can see wherever you made mistakes. So you should go and take your assignment and then compare it to what I'm going over this evening, because it's important that you go and have a look to see where you made mistakes so that you understand why you got it wrong, and then in the exams you're not going to repeat that mistake again. Okay. All right, so what I'm going to do is I'm going to share my screen so that I can put the question paper and memo up on the screen next to each other so we can go over the two together. Okay, let me see. I've got here. Where's my other one? Okay, so on the left-hand side, I've got the question paper, and on the right-hand side, I've got the memo. So hopefully you can see the two together, and it's not too small, but it's just going to be easier to put them both together on the screen like this, because then you can read the question and have a look at the answers at the same time.
Okay, perfect. Thank you, ma'am.
Can you see, Izzy? Is it clear enough?
Yeah. Yes, it's perfect.
Okay. Okay, awesome. I was just a bit worried that it's going to be too small to read properly. And remember, on your side, you can always click on the little magnifying glass and enlarge it for what you want to, where you want to follow.
Okay, cool.
Okay, so let's have a look. I don't want to spend too much time on stuff that you can easily find in your textbook, etc. So here we've got, Muhlachlo has recently qualified as a fashion designer and would like to start her own business designing and sewing wedding and evening dresses. She has approached us to get some advice on the different forms of businesses that are available to her to start her own business. So this question was essentially on the different forms of business, and it's designed to make sure the students understand the differences between a sole trader and a partnership or a registered company, in terms of, I think they gave us 5 different aspects of the company. So you had to recreate the table below, so exactly like this with these headings, and then for each of these 5 aspects you had to fill in under each of the different types of forms of business what a legal personality means for a sole trader versus a partnership versus a profit company, PTY Limited or a limited. So just one thing I'm going to mention, because I did notice it quite a bit with this question, but some of the other questions as well, that students are getting into the habit of using ChatGPT for questions instead of going to do proper research and writing things out in their own words and understanding them. So we are picking up that this is happening more and more. So please, guys, be warned. you can't reference from ChatGPT because it doesn't give you references unless you know how to use it properly. And you may not write information into your assignment without it coming from a source that you can reference. So that's where you're going to pick up problems with ChatGPT, particularly if you're not writing it out in your own words and showing that you understand it. Because we can easily tell where it comes from one of the online bots because they have a certain style of language that's easy to pick up. So we can tell that it's not the student writing the words themselves. Okay, so just be aware of that. So just quickly going through these then from a legal personality, a sole trader is not a legal personality. The owner of the sole trader is the legal personality. A partnership is not a legal personality. Again, it's the partners themselves that are the legal personalities. But where it comes to a profit company, like a PTY Limited or a Limited, the company is a legal personality in its own right because it must be registered. So it gets a company registration number, which is like an ID number for a person. I always think of it like that. A sole trader doesn't have its own ID number. Neither does a partnership. But a PTY Limited or a Limited has got a company registration number which designates it as a legal personality in its own right. And then startup procedures. Again, you just have to keep it simple. There was only one mark for each of the for each block in each column. So a sole trader is easy to start. There's not very many legal processes to follow other than choosing a name that nobody else is using and a license if applicable. The main thing with the startup procedure with a partnership that we were looking for is that a partnership, you must draw up a valid partnership agreement because that agreement lays down everything about how the partnership is going to work. And with a company, you have to register it with the registrar of companies by drawing up a memorandum of incorporation. Then the ownership. A sole trader is obviously only owned by one partnership. A partnership is two or more partners who own the business. And for a company, it can have only one shareholder, but we were looking for the word shareholder because the owners of a registered company are the shareholders, and there's no limit to the upper number that shareholders may have. Distribution of profits. All of the profits go to the sole trader. In a partnership, the profits are split between the partners according to whatever is stated in the partnership agreement. And for a company, the profits are distributed to the shareholders in the form of dividends. And again, that would depend on how many shares they owned, what rand value of dividends they would receive. And then when it comes to income tax, the sole trader, the business itself, does not pay income tax, but the owner has to declare the profit from the sole trader company in their own personal tax return. The same thing for the partnerships. The partnership itself doesn't pay income tax, but each partner has to declare their share of the profits in their personal income tax returns, whereas a company, because it is a legal entity of its own, the company pays tax in its own name, and that's done according to the company tax rate, which at the moment in South Africa is 28%, changing to 27%. Okay, did somebody have a question? Let's go and have a look. Okay. Oh, hi, Nakas. Nice to see somebody else online too. How are you doing? Anybody got any questions that that they've got so far?
No, all good for now.
You're all good, Izzy? Okay.
Yeah.
Okay, awesome. Yes, I am very good myself. Thanks, love. Okay, so let's go and have a look at the next part of the question. Okay, so 1.2, most of the students got this correct, and this was a part, obviously, that was very difficult to use ChatGPT for, so the students had to do their own thinking for this one. We had the little scenario where your friend needs 100,000 Rand to start her business. Her father, Mr. Khumalo, has agreed to provide her with 50,000 as capital. And in return, she will pay him 2% of the profits that she makes each year. So you had to read that very carefully. In other words, what are the terms of the agreement that he gave her the 50,000? So it doesn't say she has to pay the 50,000 back with interest. It says he is going to get a share of the profits. Then the other 50,000 she's going to get from SABSA Bank, and that is going to be a loan which she'll pay off in 5 equal installments and 10% interest per annum. And then she already has an order for 12 evening dresses for the Miss South Africa contestants. So we had to identify 3 different users of financial information and then explain, and this was the only place where some students made a mistake. You had to explain how they would benefit from the accounting information that was supplied to them. Some students, unfortunately, described or gave us definitions of 3 different users, which was not what was asked. You had to identify 3 users and then explain how they would benefit, how they would use the accounting information to their benefit in their relations with Muhlachlo and her business. So we've got Mr. Khumalo, and he is an investor because he is providing capital that is not a loan, but he is getting profit share. And then remember that how would he benefit from the accounting information? He's concerned with the risk in his investment. So he needs that financial information to help him determine whether he should buy more shares or hold his shares or sell them. And shareholders are also interested in information that helps them to assess the ability of the enterprise to pay dividends. In other words, to give them a return on their investment. That's what they would be using that financial information for. Then we've got the bank, and they are a lender. And lenders are interested in financial information because they will use it to determine whether they are going to get their money back, the capital of the loan as well as the interest. Will it be able to be paid back to them when it's due? And then the third user was should have identified them as South Africa contestants as customers. And customers want to know about our financial information because they want to know, can they form a long-term relationship with us? Does this company look like it's going to exist for some time into the future, about the continuation of a long-term business relationship? Some students did list Muhlachlo herself as a user, and then they stated owner or manager, and I did allow that even though it wasn't in the memo. Again, as long as you explained it correctly, how she would use that financial information, I did allow the marks for that as well. Okay. So that was question 1. Hopefully nothing too complicated there. Then for our question 2, we now move on to learning unit 2, which was the accounting equation and double entry system. And we were given a list of balances And the question, they were very clever. They gave us a list of balances of all sorts of different accounts, and they didn't tell us whether that amount was a debit or a credit. They just gave us the amount of that particular account. And then they said for each of those items listed above, we had to categorize them into the 5 accounting elements. What is it? An asset, equity, a liability, expense, or an income account? So each of those can only belong to one category. And they made that over here. So if you have a look on the right-hand side over here, you could have listed these one underneath each other. They've done it the same way as these headings on the left-hand side. So under assets, you should have had land and buildings, vehicles, the fixed deposit, debtors, and petty cash. Some students already split them between non-current and current at this point, which was fine if you did that. Equity are going to be the owner's accounts, capital and drawings. Okay, only those 2 accounts will ever be equity, and they don't belong anywhere else. Most students got capital under equity, but for some reason, a lot of students put drawings either under assets or expenses or elsewhere. So I'm not too sure why they got muddled up with that. Remember, our 2 accounts that we use when the business transacts with the owner, capital and drawings, those 2 are always our equity accounts. And then our liabilities was the mortgage loan, creditors, trade creditors or creditors control, and the bank overdraft. And because the bank was in overdraft, that makes it a liability. If the bank had a positive balance in it, then that would have gone under the asset column as well. Then our expense accounts are interest on the mortgage and the cost of sales account, and the income accounts were interest on the fixed deposit, because that's interest income, and rent income and sales. So there weren't too many mistakes made with that one, I must admit. It was that pretty much most of those were correct. Then the next questions asked, using those same balances, you now had to give us totals, and you had to total non-current assets, current assets, non-current liabilities, current liabilities, and then calculate the owner's equity. They gave you the formula that owner's equity is calculated by taking all of our assets minusing all of our liabilities. So our non-current assets, if we look at the top over here, land and buildings is non-current and vehicles is non-current, and the fixed deposit was non-current because I'm not too sure. They told us over here, if you look on the left-hand side, that the fixed deposit, they told us that it was a long-term fixed deposit, which means that we're only getting our money back from the bank longer than 1 year in advance. So maybe in 2 years' time or 3 years' time. So that is what made that fixed deposit a non-current asset. That was the one where students made an error. Most of the errors were made with that. Then the other 2 were our current assets, were then debtors and petty cash. Non-current liabilities is going to be our mortgage loan, and our current liabilities would be the creditors and the bank overdraft. You can see the totals here. And then to calculate your owner's equity, you should have added up whatever total you got for non-current assets and assets, current and non-current, add those together, and then add up your non-current and current liabilities totals there, so that you got total assets minus total liabilities, and then that gave us owner's equity. So that question was done pretty well. There were some errors, but actually not too many. It was that question was not too badly done. Anybody got any questions with that one? Anything that you didn't understand, why it belonged under one particular column or anything? You're all good.
All good, ma'am. I actually put drawings, and for some reason, when I looked at my paper, I put drawings and expenses, and I was thinking to myself, why did I do that?
And you weren't the only one. There were quite a few students that put it under expenses. And I think the reason why students do that is because drawings is money going out of the business. So we take money out of our bank account, or we take inventory out of our stock if the owner takes drawings. And so that kind of seems to think that because the business has lost money, so to speak, that it's an expense, which is true. It is a type of expense, but because it's specifically a transaction between the business and the owner, that's why it's called equity.
Okay, fine. Thank you.
But that makes sense. Only because it's a transaction between the business and the owner, that's why it goes under equity.
Okay.
Okay, and then we've got another scenario. Argon Traders sells goods mostly for cash, but they also sell on credit to one customer, Amethyst Traders, and they only buy goods on credit, and their supplier is Granat Traders. So from that information, who is the debtor and who is the creditor? So you had to remember that debtors are people that owe you money. So who do you sell goods on credit to? So that would then be Amethyst Traders. And creditors are people that you owe money to. So who do you buy from on credit? And that would be Granat Traders. And then in your own words, explain the difference between a debt and a debtor. So this is in your textbooks as well, and there's plenty of online sources to be able to get the explanation, but you had to explain it correctly so we could clearly understand from your explanation that you understood the difference. So the debtor is the actual person or company that owes the business the money. And when we talk about the debt, there we are referring to the actual amount of money that is owed. So again, there wasn't too much trouble with that one. Most of that was done correctly. And then our question 3 comes from Learning Unit 3, which is everybody's favorite chapter, VAT and source documents. But I was quite proud. Most of the VAT questions, students are starting to get them correct. So again, remember with VAT, you really just have to keep practicing and make sure you understand the calculations, and then you will get them correct. So you had to complete the table for 6 marks. They gave us one exclusive amount, one VAT amount, and one inclusive amount. And for each of those, you had to calculate the 2 missing amounts. So where you had the VAT exclusive amount, that means this is the amount before VAT has been added. The easiest way here would have been to calculate the VAT, which is 15% of the 46. So you would have said 46,000 times 15, and that would have given you your 6,900. And then if you take the 46 plus the 6,900, that would have given you the VAT inclusive amount. Then for the second one, where they gave you the VAT amount itself, excuse me, you then had to calculate how much the VAT excluding amount was, and then the including amount. So again, the easiest way is to pick one of these amounts. So remember, the VAT is 15%. So I would have taken 16,200 divided by 15, which will give you the value of 1%, and then multiplied by 100, which will give you the exclusive amount, or 16,2 divided by 15 multiplied by 115, which would then give you the inclusive amount. Or 16,200 multiplied by 100 over 15, which would give you the 108. 16,200 multiplied by 115 over 15, and that would give you this amount. And as soon as you've got one amount, so if you had have calculated the excluding amount first, then you add those two together, and that would automatically give you the third missing amount. And then what? And then over here where they gave us the inclusive amount, that means it's the exclusive amount, which is the 100%, plus the VAT amount, which is 15%, which means the inclusive amount is 115% of the original value. So if we then take the 170,200 and we divide that by 115 and then multiply that by 15, we'll get the VAT, or multiply 170,200 divided by 115 and multiply it by 100, and that will give us the VAT exclusive amount. And then you could also say 170,200 multiplied by 15 over 115, that would give us the VAT. 170,200 multiplied by 100 over 115, and that would give you the VAT excluding amount. But hopefully that that little tutorial letter that I sent you on VAT and all the VAT calculations helped you with that as well. But really, when it comes to VAT, you just have to keep practicing until it all starts making sense to you and you just remember it automatically. Then this one, the next one was not too badly done. You had to identify the VAT category. So petrol is 0 rated. Life assurance, and it's life insurance, is exempt. If you buy white bread does include VAT. White bread is a standard VAT item. We get charged VAT on white bread, but because they stated here we bought the white bread for staff lunches, that makes it non-allowable, because that means even though VAT is included in the price of white bread, we are not allowed to claim the VAT back because we are purchasing it for our own use. Basically, we're the end consumer. And then the same thing with the kettle for the office kitchen. Because we are purchasing the kettle for our own use, it's deemed to be entertainment for staff use, and so therefore we are also not allowed to claim the VAT back. Because a kettle used for the office kitchen, we are not using it in the production of our income, in our business dealings as such. It's also basically being bought for personal use. So a lot of students got 3 out of 4 for that, and it is these last two non-allowables that generally were the ones that tripped students up if they battled with anything. And then 3.3, you had to match the transaction in column A with the correct source document. So let's just have a look at that. A cancellation of sale, you would use a credit note to record that. Goods that are sold on credit, we would record on a credit invoice. If we purchase tea and coffee from petty cash, we would fill out a petty cash voucher. If we paid our telephone account via EFT, we would receive an EFT confirmation slip. And if we deposited cash into our bank account, we would use a deposit slip as the source document to record that transaction. So I would say 99% of the students got all of those correct. There weren't, again, very many errors with that question. The 2 bases that a business can register for VAT, it's one of your learning objectives. So you have to state the payment or cash basis or the invoice basis. So the payments basis or the invoice basis are the two that we can use. And then you have to explain which of those two would be more suitable for a sole trader if they've got a turnover of less than 2 million. So because the turnover does not exceed 2.5 million per year, we said the most suitable basis would be the payments basis, because with that basis, that means that the business doesn't have to pay output VAT until the day that the customer actually pays them for that sale. So that assists the cash flow of small businesses. So they would therefore choose the payments basis as opposed to the invoice basis, because on the invoice basis, we have to record and pay the VAT over to the receiver in the month that the invoice is produced, is created, instead of waiting until the invoice is actually paid to us. So that was only for 3 marks. And again, also most of that, the students got that correct. Then this one was a little, I didn't think it was a tricky question, but students did seem to battle with it a little bit. They gave us a list of amounts and they said that these amounts all include 15% VAT. Okay, so these are including VAT. In other words, they represent the 100% sales value plus the 15% VAT, 115%. So using the information provided, we had to calculate the VAT payable or refundable to SARS. So in order to do that, you had to make a list of those amounts that are refundable from SARS, and then a list of those amounts that are payable to SARS. Subtract the two totals from each other, and in this case it was the payable VAT that was greater than the refundable VAT, and you had to then state total payable and then the difference that you got. But what you had to calculate, they said calculate the VAT. So you had to calculate the 15% VAT amount that was included in each of those amounts, correctly identify them as input or output, and then do the calculation. So your calculation for the VAT for each of these would be 115,000 multiplied by 15 over 115 to calculate the VAT amount. And that identical calculation for each of those. Anybody battle with any of those?
Yeah.
Yes. You, yeah? Go ahead. Carry on. What were you going to say, Izzy?
Okay, I was going to say, I didn't battle with it, but I made a table of input VAT and then output VAT. And then in my input VAT, I put purchases return, but I put it in red, and then I put it like a negative to show that it isn't VAT included. But I don't know if that, and I think I got marks off for that, because also for my output VAT table, I put sales return in red and negative. So I don't know if I should rather leave that out or.
Yes, quite a few students did that, and that the sales returns and the purchases returns were probably the only mistake that students made, and also it was a vast majority of them that made that. So remember, no, I think it was other students I was talking to. We don't put we can't put. If we are, let me just go back to the paper so we can see it. Tile it vertically. A sale is output VAT because we have made a sale and we now owe VAT to the receiver. So only sales types of transactions are going to be output VAT. When we've got a sales return, it's the complete opposite of a sale, and that is actually input VAT. It's not negative output VAT. We record it under input VAT. So if you were going to do a credit note, you would, let's just say, you would credit debtors control, and you would, let me just get this the right way around. We credit in debtors control, and we would be debiting sales returns and debiting input VAT. So you would physically, in the journal entry that you did, you would have to debit input VAT when you recorded a sales return. So that's why it wasn't correct to list it as negative under the output. Although it did show that you understood it was the opposite. And I can't remember, I think I did deduct marks for that, because strictly speaking, if you look over here, the sales returns had to go under input VAT, and purchases returns would go under output VAT. Because again, with the purchase, when we make a purchase, we debit purchases and we debit input VAT. And when you return a purchase, you then do the exact mirror image of that. You credit purchase returns and you credit output VAT. It was a tricky one. That one was a bit of a tricky one. But you still would have got the marks for your correct total. You probably just would have lost a half a mark for each of the incorrect placements for that one.
Yeah. Okay, perfect. Thank you.
Does that make sense? It's a little bit of a technical accounting question, that one.
Yeah.
But you did have to get it technically correct.
Okay, cool.
I completely understand what you're saying, and it shows that you understood that it was the opposite way around, but technically we had to call it the correct input or output VAT. So yeah, that was unfortunate, but it's one of those ones, hopefully, that you learn from the question. The question will actually teach us something. Then our question 4, which was our last question. This one over here, we've got a company is a registered VAT vendor, and they only trade with other registered VAT vendors. So the business charges 15% on all its sales, and all amounts will include VAT unless VAT is not applicable, or they tell us that VAT isn't included. So in which circumstances would VAT not be applicable? So they say in all of these amounts include VAT, except if VAT would not be applicable. In which case, in what kind of cases could you think of where VAT would not be applicable? In other words, it means that particular transaction would not include VAT, or otherwise we are not permitted to claim the VAT back, for instance. It might be non-allowable VAT. Where else would it be VAT would not be applicable? Think of any, can you think of anything? What about
exempt?
Yes, if it was rent for a dwelling, because then we don't, that's VAT exempt. And if it was a non-allowable item, for instance, we purchased white bread for staff lunches, then VAT would not be applicable. If it was interest that we were being charged, or that we were charging somebody else, there's no VAT on interest, so VAT would not be applicable. So that just means as VAT not applicable, that means that you need to know your VAT categories, so that when you read a list of transactions, you will quickly pick up whether any of those transactions, for instance, here you correctly identified dwelling is for private use, so therefore there is no VAT. When an owner contributes cash to their business, there's no VAT on that transaction. A normal cash sales would definitely include VAT. And what about petrol? Is there VAT included in petrol or not?
No.
Can you remember VAT categories? Petrol is also a zero rated item. Yeah, so there'll be no VAT on the petrol. And then this one over here, interest received, 2,500 Rand interest. Interest is one of those items that is VAT exempt. So there'll be no VAT on that either. So the only two transactions that actually included VAT is the cash sale and the stationery that we purchased. None of these other four actually included VAT. So remember, I've reminded you guys before, it's absolutely vital that you know your VAT categories so that you can answer a question like this correctly. This is the reason why we memorize VAT categories for a question like this. Okay, so we've got that sorted out. Those are our transactions. And then they said our balances at the 31st of December. So these are January transactions. So 31st of December means these would be our opening balances for the month of January. Bank in overdraft of 12,000 and the petty cash has got a balance of 3,500 in it. And then for the month of January, our cash book payments total in the bank column was 18,000 Rand. So what did they want us to do? We had to record the cash book receipts. So only cash book receipts out of these transactions. And they told us which columns they wanted us to use. So if you look on the right-hand side, I'm going to hopefully just try and fit it all in. Make this a little bit smaller, but I don't want to make it too small. Okay, I'll have to pan across, I think, in a minute, rather than make it too small. Just a second there. So they gave us, we've got our columns for our cash book receipts, document day details folio. They said we didn't need to fill in document or folio. And then our main column in our cash book receipts is bank. So we will be debiting the bank account and then crediting output VAT, crediting sales, and crediting these accounts that we used in our sundry accounts. And then because it's a cash book receipts and we are using the perpetual inventory system, here they told us perpetual inventory system, we know that we must have a cost of sales column for any instance where we have received money from a sale that we made. Okay, so first of all, we had to identify correctly only items that belonged in the cash book receipts. So on the 2nd, the owner contributed cash to the business, so that we received 10,000. On the 4th, we made cash sales of 17,250, so that's a receipt of money. On the 6th, we paid money out, so that's not applicable. On the 10th, we received money from the bank for interest, so that's going to go into the receipts. And then on the 12th, our tenant paid us rent, so we received 2,000 Rand rent. On the 17th, that's a purchase that we made, so that will go in the cash book payments. So our receipts are then going to be the 2nd, the 4th, the 10th, and the 12th. So only those 4 transactions should have appeared in the cash book receipts that you did. So let's have a look at each of those in turn. So on the 2nd, the owner contributed 10,000 in cash. So in the details column in the cash book receipts, we must always write down the name of the person or the source of the money that we received. So Petro Stevens is the person that gave the company the money. So we put her name in details. In bank, we put the total amount received, including VAT. And then a contribution doesn't belong under the sales column, so we have to use the sundries column. So the amount of 10,000 goes under the amount column, and under details in the sundry accounts, under the details column, we always put down the name of the general ledger account that we are going to, in this case, credit, because it's the cash book receipts. So not a description, it must be the name of the general ledger account that we are going to post to. Because remember, we use our cash book journal to post to the general ledger at the end of the month when the cash book receipts is completed. So we're going to debit the bank account, credit the output VAT account, credit the sales account, and then these sundry accounts, we are going to credit capital, credit interest, and credit rent. Okay, so those are the names of the general ledger accounts. So nothing under the VAT column, because that is a capital contribution and that transaction does not include VAT. Then in the fourth, we made a cash sale of 17,250. So under details, we write down cash. You could also have written cash sale, that's acceptable. Under the bank, it must be the total, including VAT. And then on the right-hand side, we split that into the VAT amount and the excluding VAT amount. So 17,250 multiplied by 15 over 115 gives us the VAT. And then 17,250 minus the VAT will give you the sales value. And then on the 10th, ABS Bank paid us 2,500 rands worth of interest. So ABS Bank, the name of the person we received the money from, goes under details. The total amount goes under bank. There's no VAT on interest, so the total amount goes under sundries and under the details. You could have put there interest income or interest received, anything to show that that's an interest income account. And then our last one, we received 2,000 Rand from our tenant that is for rent. So they didn't give us the name of the tenant. So you could have put, in this case, it's an EFT, which is cash that we received. You could have put, I accepted rent or rent received or cash. Total amount under the bank column. And because it's rent for a dwelling, there's no VAT. So the full amount goes under the sundry column. And the general ledger account name is then rent received or rent income. Then they asked us to total, they said you only need to total the bank column. So you needed to total that to get the extra half a mark. And then for our sale, where's the sale? We also had to calculate, because we're using the perpetual inventory system, you also had to calculate the amount that belongs in the cost of sales column. So let's go and see what they told us about our cost of sales. Where is it? Always when I'm looking for these amounts, I don't see it. Oh, here it is. I'm looking right at it. The business marks up its inventory at 25% on sales. Okay, so that means that our profit is 25% of our total sales figure. When they say markup on sales, that means the profit or the Rand value of the markup is 25% of the sales figure. So that means our sales figure, which is the 17,250, is the 100% amount. The profit will be 25% of that sales figure, And then 17,250 minus the 25%, what's left over will then be the cost of sales. You could also have said if the markup on sales is 25%, then the difference, the 75% of sales, is then the cost of sales. So you could either have said 17,250 times 75%, and that would have given you the 11,250. Or you could have said 17,250 times 25%, and then subtracted that from the 17,250, and that also would have given you 11,250. Sorry, I beg your pardon, I've made one mistake here. You've got to take the VAT off first. 17,250. We first have to calculate the excluding VAT figure, which is going to be 15,000 if I'm not mistaken. 17,250. Oh, we've got it right here. Here we go. Sorry. Under the sales column, the excluding VAT figure is 15,000. So it's going to be 15,000 times 25% is the markup, and 15,000 times 75% is the cost of sales. You have to go, Izzy? Okay, no problem. I am going to wrap up now anyway, so you can follow the rest in the recording. We're almost done. Leica, did you understand what I said now about we always calculate the cost of sales on the excluding VAT figure. We only add the VAT once we've got the total selling price, which is then our cost plus the markup equals selling price. And then once we've calculated the selling price, then we add the 15% VAT. So if we want to calculate the cost of sales, and they've given us the including VAT selling price, we then first calculate the excluding VAT sales value, and then we use that figure to calculate the cost. Okay, let me get this back. Okay, so that means that 15,000 times 75% is 11,250, the cost of sales. I hope I didn't muddle anybody up there. And then the last bits that they wanted was we had to draw up the T accounts. Sorry, not the T account. Okay, we did 4.1 here. Yes, the T accounts. Prepare the following general ledger account. So as soon as they call it a general ledger account, then we know it's the T account that they want, which is on the left-hand side. Date, details, folio, amount. And on the right-hand side, date, details, folio, amount. Left-hand side being the debits and the right-hand side being the credits. So they wanted us to do the bank account and the petty cash account. I am going to, yeah, I don't really want to close that. Okay, so here's our bank account. Let's have a look at the credit side first. Opening balance for our bank account is on the credit side because our bank was in overdraft. It is a liability. That's why the balance had to go on the right-hand side. And then all we had to do was total receipts and the amount on the left-hand side. So here's the total receipts from our cash book receipts, the bank column in the cash book receipts. Okay, there's the total receipts. And then they gave us this 18,000. They told us that the bank column in the cash book, payments for the month was 18,000. So on the right-hand side, we've got total payments, money coming out the bank account, 18,000. And then we had to balance the T account. So we add up the left-hand side and we add up the right-hand side. So in this case, the right-hand side was only 30,000, 12 plus 18. So that means 31,750 was the greater value. So we then write 31,715 down on both sides, leaving a line open above it for writing the balance brought down, calculating the balance brought down. So we need to make both sides equal 31,750. The left-hand side already equals 31,750. So 31,750 minus 30,000 equals 1,750. So that's how we calculate what our balance carried down is going to be. So this is just the calculation of the balance, this bit here. And then because the debit side was greater than the credit side, we know that this balance is a debit balance because the debits were greater than the credits. So we then bring that balance over for the 1st of February, balance brought down 1,750. And then that becomes the opening balance of our bank account for the month of February. Sana, yes, I'm just looking at your question now. Talking about the sales figure, yes, the sales in the cash book receipt. So we were still talking about the cost of sales then. Leica, yes, it does make sense because remember in this question, they said that the markup was markup on sales. It wasn't a markup on cost. It was a markup on sales, which means that the selling price is then the 100% and the markup is 25% of the sales value, which means that the cost is then 75% of the sales value. Okay, so you always have to read the question carefully. Did they say that the markup was markup on cost, or did they say the markup was markup on sales? Because then you are going to do a different calculation. Basitsana, you got the same answer. Okay, perfect. Just go and have a look at that tutorial letter that I posted in your announcements. I also put it into more resources where I did a full explanation with the calculations, depending on whether they've told you, is it markup on cost or markup on sales? Go and have a look at that. And then just remember this question that we've just done. They said it was markup on sales. Okay. We're nearly there, guys. I don't want to keep you. I know it's late. Oopsie, wrong one. I think there's only one little section left, which is the petty cash general ledger account, which was the last thing that they asked for. General ledger account for petty cash. So this one, you had to look at the transactions that they gave us. So if we go back here, they gave us the opening balance for our petty cash as 3,500. So that would go on the left-hand side here, the beginning of the month, 3,500 balance brought down as at the 1st of January. And then they told us that we purchased stationery of 575 Rand from petty cash. And we also paid 800 Rand for petrol from petty cash. So these two transactions, oh, it's not what I want, sorry. I was trying to change the color, but I can't do it from here. So the transaction on the 6th and the transaction on the 17th, those two are what belongs in our petty cash general ledger account, and both of them are payments out of petty cash, so they will go on the right hand side. We are crediting petty cash because petty cash is an asset, and when an asset decreases, we credit it. So we wrote on the 6th of January, details is petrol and the amount of 800, and on the 17th of January we wrote details stationery and 575. And remember, petty cash is just like a bank account. It's the actual cash that we've got in our petty cash tin. So there was no entry that we had to do for VAT. We had to indicate here the total rand value that we took out of the petty cash tin or the petty cash box. So the full 575 of stationery must come out. You could also have added these two amounts together and written them as one posting from the petty cash, which is how we would post the petty cash journal at the end of the month. So either one of those two methods would have been correct. And then again, we need to balance our work out the balance carried forward. So we've got 3,500 on the left-hand side. Oopsie, what am I doing here? 3,500 on the left-hand side. So the right-hand side must also add up to 3,500. So we've already got 800. So 3,500 minus 800 minus 575 equals the balance of 2,125. And again, because the debit side was greater than the credit side, this balance is a debit balance. So we carry it over here to the debit side of petty cash, so that our opening balance on the 1st of February is a debit balance of 2,125. Sure, guys, that was a lot, but I wanted to get through all of that so that you had all the calculations and all the explanations for the whole assignment, so that you can go and have a look to see where you had any problems. Anybody got any questions? Who's still left? I think it's only Laika and Basitsana left. Izzy had to leave us. Any other questions that you haven't already asked me, guys? Let me just see if I didn't miss anything. Okay. I think we've got all the questions as we went along. No more questions from anybody? You guys good? Okay, I know this has been a long session. This is recorded and I'll post it for you. Okay, perfect. And then you've got 3 weekends left to work on your assignment 2. So from the rest of this week, we'll now start working on assignment 2. And your NSS for assignment 2 will be on the 12th of October. And that will be with George again. And your assignment 2 is due on the 18th of October. That's just to give you a heads up with the dates. Okay, guys, I'm going to end the record now, and then just remember any questions that you've got as you now start working on your second assignment, just let me know, and we'll start. Then I know exactly what you need help with and what to cover. Okay, guys, thank you very, very much for taking part and participating and asking questions. And I hope it was very helpful for you. And then I'll see you guys in the next collab. Thanks, guys. Have a lovely rest of your evening. Cheers. See you guys again soon. Yes, no rent, private sorry, no VAT for private rent. There is VAT charged on business rent, but not if the house or property is being rented out for someone to live in. You're correct. Okay, guys. All good? Then I'll stop the recording here.